Welcome everybody, and today we'll discuss about section 54G. Yes, when sometimes you transfer your business from urban area to rural area, then you can claim this deduction. Now, why you shift to rural area? Two advantages. One, government give you lot of incentives, whether it is tax benefits, whether it is other benefits. Government will encourage you to set up businesses in rural area. For government, it is an employment generation opportunity, infrastructure development opportunity. So for that purpose, government encourages people to shift undertakings from urban area to rural areas. Okay, clear? Now, so what is the topic's name? Reduction in respect of capital gains on the transfer of undertaking, industrial undertaking from urban area. Now to rural area I'll add 54G. Okay, to whom it is applicable? Individual, HUF, company, AOP, BOI, local authority, municipality, artificial juridical person, any assessee. So this section is applicable to all the assessees. Okay, now what should happen? You should actually sell your machinery and plant. You should actually sell your land and building, right? Or you should actually transfer your rights in land and building. Like example, lease rights are there, correct? 90 years lease, 100 years lease. So you have right in that land and building. So you transfer the lease agreements, lease rights to somebody, right? So what you transferred, what you sold in the urban area, please remember I said machinery, plant, land, building, rights in land and building, right? And these are all were used by the business, right? These are all used by the business of industrial undertaking in the urban area. This you should remember. If this is the case, if these are the things which are transferred, then obviously because you transferred, capital gains will arise. But if you buy within 1 year backwards, that is 1 year before and 3 years after, that means today is the date of transfer. From today within 1 year back, and from today 3 years fast forward, that means within this 3 years period, if you buy the new asset, you construct the buildings, land, then definitely you will get the exemption. Okay, so what should happen? Your undertaking should shift from urban to rural area. That is what the criteria. And when you go to the rural area, new plant should be purchased, new machinery should be purchased, right? Land should be purchased, building should either be directly purchased or it should be constructed, correct? Or from old plant and machinery of the urban area can also be brought to rural area. So transfer of plant and machinery can also be done, and certain expenditures which are approved by the central government. So what should be purchased? 4 points I said, A, B, C, D. One is plant and machinery. Second one is land and building, constructed or purchased. Third one is transfer of plant and machinery from urban area undertaking to rural area undertaking. And fourth one, D point, is expenditures which are approved by government. That's it. If you buy this, right, within how much time? Within 1 year before the date of transfer from urban to rural, or within 3 years after the date of transfer from urban to rural, you can do such purchases. A, B, C, D, all are okay. But if you do, what will happen? You will get the deduction. Deduction, how much? the amount invested in the new asset, the amount invested in the new asset, amount invested in the new asset or capital gains, whichever is lower. Amount invested in new asset or capital gains, whichever is lower. Amount invested in new asset or capital gains, whichever is lower. Now when I say capital gain, I mean it may be short term or it may be long term. When I said capital gain, it may be either short term or it may be long term. Okay, you got the deduction. But after claiming deduction, it's not over. You should maintain the new undertaking for at least 3 years. You should maintain the new assets for at least 3 years. Okay. So you should maintain the new assets for how many years? At least for 3 years. If you maintain it for 3 years, no problem at all. After that you sell, okay, capital gain will be computed on the sale of undertaking. No problem. But if you sell within 3 years, right, you transferred the undertaking in urban area to rural area, right? From the date of transfer, within 3 years, if you sell the new industrial undertaking, then on the sale definitely capital gains is computed. On the sale definitely capital gains will be computed. On the sale definitely capital gains will be computed. Okay, on the sale definitely capital gains will be computed. Clear till now? No problem, right? Okay. On the sale capital gain will be computed, but we will also reduce the cost of new undertaking for computing capital gain, correct? While reducing the cost will not be the actual cost which will be reduced, right? They will not tell you that actual cost directly reduced, please, because you failed the condition. You sold the undertaking within 3 years. New undertakings, maintain it for 3 years, we said. You did not hear. You sold within 3 years. So while computing the capital gain of the new undertaking, we will reduce the cost, right? But we will take actual cost minus 54G exemption, that is minus 54G deduction. The balance cost only will be reduced. The balance cost only will be reduced to compute capital gain. Okay, whether it is short term capital gain, whether it is long term capital gain. Clear? Very good. Now, if suppose within 3 years we should actually construct the building, plant and machinery, everything is okay. But if suppose you did not do so, now you kept the money in capital gain account scheme 3 years over from the date of transfer. You did not utilize the money. What will happen to that money in capital gain account scheme? Answer is simple. The amount in the capital gain account scheme, unutilized amount, will be fully taxable. In the previous year, taxable in the previous year, in which the previous year in which the period of 3 years expires. Suppose 2022-23 is our exam previous year. So what happened? 22-23, what you did is you transferred the undertaking. Now you have to buy one, right? So you kept the money in the capital gain account scheme. Suppose 1st January 2023 you kept the money. Now 2023, 2024, 2025. These 3 calendar years you have to ignore because 1st January. But on 23, 24, 25, right? Okay. On 1st January 2026, that means the expiry of the 3 years period, right? That means previous year 25-26. the amount kept in the capital gain scheme will become taxable. Okay, this you should remember. And what is urban area? Are very easy yaar. A municipality is an urban area. Any other area notified as urban area by government is an urban area. With this, I feel you understood the entire concept. Again, I am recapping for you what I said. Here I am talking about deduction in respect of capital gains, right? In relation to the industrial undertaking, in relation to the industrial undertaking, in relation to industrial undertaking, shifted from urban area. Section 54G, applicable to all assessee. What you are transferring? Plant, machinery, land, building. Rights in plant, machinery. Okay, rights in land and building, right? And all these were used for business or industrial undertaking. Now, what you are buying within 1 year before or 3 years after, you should buy what? Again, plant and machinery or land and building, or construct the building, right? Or you incur certain expenditure approved by government, or bring the plant and machinery from urban area to rural area, then you will get the deduction for sure. How much deduction? Amount invested in new asset or the capital gain, whichever is lower. That means capital gain may be short term or long term, no problem at all. If suppose within 3 years new industrial undertaking is sold, then while computing the capital gain for new industrial undertaking from the actual cost, the deduction under 54G is reduced and balance becomes taxable. If capital gain account scheme we kept the money and 3 years elapsed, the year in which it elapsed, in that year the amount will become taxable.